Hello everyone, welcome to the video. Okay, today we are going to talk about different types of accounts and the golden rules of accounting. Okay, trust me, it's not just for the business students. Understanding the basics of accounts and some simple accounting rules can actually be super helpful in your everyday life. Whether you are managing your own money, trying to understand how businesses work, or even say planning a small event, these concepts will basically give you a better handle on your finances. Okay, let's just dive in. Now, what is an account? Okay, now think of an account like a special notebook or a digital file where we basically keep track of money related to a specific thing or person. Okay, now you have different pages in your notebook, one for your pocket money, one for the money you owe your friend, and maybe one for the things you own. Okay, in accounting we do the similar thing, but in a more organized way. We basically create separate accounts to track things like the money in our bank, the things we own. We create separate accounts for the money we may spend or we earn, everything. Okay, with these we use basically these accounts to organize and understand our financial activities. Okay, now just like we categorize things in our daily life, accounts are also grouped or categorized into three main types. Okay, it's like think of like sorting your belongings into three different boxes. So we have three main boxes of accounts. So we have three main types of accounts. One is your personal account, the other is the real account, and the third one is the nominal accounts. Okay, don't worry, these names might sound a bit formal, but they are actually quite simple to understand. Okay, let's actually try to understand each one. Let's start with the personal accounts. Now these accounts basically deal with people, companies, or any kind of organization. Basically, if a transaction involves a specific who, it is likely a personal account. For example, okay, if you are buying something from a company, okay, it will be called as a personal account. If you are paying fees to your school, the school's account will be personal account. If you are lending money to your friend, say Rohan or anyone, Rohan's account will be a personal account. Okay, those are personal accounts. Personal accounts are basically related to individuals and groups. Now next up is, what is the next account? Okay, next up is we have real accounts. Now these accounts are all about the things we own. Accounts for all assets and possessions will be called as personal accounts. Okay, all the valuable possessions of the business you or your family owns or your business owns will all be treated as personal account. Okay, things like say cash in hand, the money in your bank account, the furniture, the building account, the machinery account, computer account, all these fall under real accounts. So personal accounts is all about individuals and groups. Real account is all for assets and possessions. Okay, now let's actually come to the final one, which is, what is the final one? The third one is nominal accounts. Now nominal accounts basically is for what we spend and what we earn. They all deal with either the expenses, whether the money going out, or the incomes, what is the money coming in. Okay, these accounts are used basically to track all the money that goes out, which could be expenses or losses, and all the money that comes in, which is incomes and gains. For example, if you are paying rent for your apartment, that is an expense. If you are paying salary, that is an expense. If you are receiving interest, if you are receiving interest, that is again a nominal account, that's an income. If you are receiving salary in your personal account, that is again nominal account. Okay, so nominal accounts are basically for all your expenses and incomes. Okay, now we understood the three types of accounts: real account, personal account, and nominal account. Personal accounts are for individuals and groups. Real accounts are for all assets. Okay, possession and assets. Nominal accounts deals with expenses and incomes. Okay, now let's just move ahead. Okay, 3 types of accounts is what we have done. Now we all know now the 3 types of accounts. Let's actually talk about the golden rules of accountings. Now these are 3 simple principles that will tell you how to record transactions in these 3 different types of account. Okay, now think of them as easy to remember guidelines. Okay, now let's actually move one by one. Okay, the first golden rule is for personal account. Personal account means it's for individuals and groups. Okay, now in individuals we have 2 types of persons. One is the receiver, the other is a giver. Okay, we have 2 people there, a receiver and a giver. So the golden rule for personal account will be debit the receiver, credit the giver. Debit the receiver, credit the giver. Okay, always remember that. Remember this, debit is on the left side, credit is on the right side. On your accounts, when you create accounts, later on I'll explain about this, okay, in another videos. But debit and credit, when we say debit is always in the left side, credit is always in the right side. Okay, now the rules are this. For personal accounts, we always debit the receiver and credit the giver. Debit the receiver and credit the giver. For example, if you have paid 500 rupees to your friend, you will debit Rohan. Okay, if the friend's name is Rohan, you will debit the receiver. Who is receiving 500 rupees? Your friend Rohan. So you will debit Rohan's account. Okay, for example, if you are taking loan from Rohan, okay, I am Swapnil. If I am taking loan from say you, because I am receiving it, I will be the creditor. I will be in the credit. Sorry, right? Don't get confused. Okay, again the rule is debit the receiver, credit the giver. Okay, I'm repeating it. Debit the receiver, credit the giver. If for example we are paying 500 rupees to your friend Rohan, because he is receiver, he will be debited. Now you are the giver. If you are giving, your account will be credited. Okay, once we start writing journal entries, this will make it very simpler. Okay, right now remember these rules. For personal account, the rule is debit the receiver and credit the giver. Okay, now let's move on to the second rule for the second account. Okay, now golden rule for real accounts. What is real account? Real account deals with all assets and possessions. Okay, now assets and possessions, they either come in or they go out. Okay, like in personal accounts there are two parties, receiver and giver. Okay, in real accounts there will be 2 things which will happen, either things come in or things go out, because this is about assets and possessions. Okay, so the rule here is debit what comes in, credit what goes out. Okay, debit what comes in, credit what goes out. Okay, for example, if you are buying a television, okay, the television is coming in, so you will actually debit the television account. Okay, if you are buying a television, if it is coming in, you will debit the television account. For example, same thing happens after 3 years, 4 years, the television is not working good, or you are basically buying another television, selling off this one. If you are selling this television, then what happens? If this television is going out, if you are selling out the television, this television account will credit. If you are selling it because it is going out, the selling account, this account will be credited. Okay, so whatever comes in, you should debit it. If it is going out, credit it. So the golden rule for real account is debit what comes in, credit what goes out. Okay, that is simple. Okay, let's take the third one. Okay, now we have done golden rules for personal account, real account. Now this is for nominal account. Now what is nominal account? Nominal account deals with all expenses, losses, incomes or gains. Okay, now nominal account deals with expenses or losses, incomes or gains. Now the golden rule for nominal accounts is debit all expenses and losses, credit all incomes and gains. Okay, you have to debit all expenses and losses, credit all incomes and gains. For example, if you are paying internet bill, internet expense will show it on debit side. Debit is on the left side. Okay, if you are paying say telephone bill will be on the debited, will be debited. Okay, and credit all incomes and gains. What all incomes you receive, you will credit it. For example, if you are receiving rent, if you are a landlord, if you are receiving rent, then you will credit rent received. You will credit rent received account. If you are receiving interest, okay, from bank, okay, or from any other person, if you are receiving interest received account will be credited. When I say credited, it will be written on the right hand side. Debited is, it's written on the left hand side. Debit is on the left side, credit is on the right side. Okay, now the golden rule for nominal account is debit all expenses, credit all incomes. Okay, now these are the basic types of account and rules of accounts, golden rules of accounts. Okay, now let's actually summarize this, whatever we have learned today. Okay, now we have tried to understand today is, we have learned today three main types of account. Personal account basically deals with people and organization. Real accounts deals with assets. And nominal account basically deals with expenses and incomes. And we are also learned the three golden rules. What are the three golden rules? Debit the receiver, credit the giver. Debit what comes in, credit what goes out. Now, and debit all expenses and losses, credit all incomes and gains. Now these are the fundamental building blocks of accounting. Okay, now I hope this has made understanding accounts and the golden rules a little less intimidating. Okay, if you find basically this video helpful, please give it a thumbs up and subscribe to the channel for more easy to understand explanation of important topics. And if you have any questions, feel free to leave them in the comments below and I'll do my best to answer them. Thank you.